Would do 2 points bullish on this skew. You tell me what you would do on this skew. What would you do on that skew, guys? You would not be doing 2 points bullish, would you? If you're doing any skew at that stage, it would be bearish, 100% bearish. Now, you might be saying, yeah, well, not really. And you might be right by saying not really, because this in itself is not a full storyline, is it? The full storyline, well, what is the gamma doing then? You tell me what the gamma's doing yesterday at the close. Really bearish, right? Really bearish. So the gamma's bearish. In other words, there's a lot of people buying cheap puts yesterday. A lot of people buying cheap puts, which makes the hedging below the bottom edge very slippy indeed. So with the price of volatility rising and the gamma line falling like this, we know that the bottom edge is susceptible to a strong short sell hedge position, which is why last night I sold the RGL. As you know, last night I tweeted it out. We sold the RGL. When the tweet came out, it was just below the RGL. You could have joined me if you wanted to, and you'd have made yourself a small fortune today, of course, when the market broke south, and it stayed breaking south. So this is kind of crystal clear. The gamma line is very bearish, and look at what happened to the gamma line today, guys. Panic selling, isn't it? Panic selling. I mean, that's ugly. That is very ugly. I mean, this could be pointing towards a kind of calamitous 50-point drop on the S&P from this current price based on what the gamma's doing. But that gamma takes time to build again. The gamma takes time to build. You know, at the moment, obviously, they're not building gamma because they haven't seen anybody expiring out their options. They haven't seen anybody cashing in their spike on their options yet. So they haven't seen that, which is why the gamma line is still falling. Now, obviously, that's dangerous. We can look at the curve to see if it's improved at any stage so far. And you can see the curve and the gamma line are almost exactly the same line. Very dangerous. Very dangerous. So you can see why last night I was a seller from the prior highs. Without any question, if you were trading last night, you would have been a seller from prior highs. I don't think anybody would have missed that opportunity. And of course, the idea, of course, is that the gamma line suggested that there was slippiness below here. And that, for me, would have opened the door to quite a reasonable short sell on the skew. And as I said, the pricing was different. The pricing was wrong. They got the pricing badly in the wrong side of the market. And it doesn't happen very often. But as I said earlier in today's classroom, it does sometimes happen. And we've taken full advantage of it because I was short and I was right. The dealer was wrong. That sometimes happens, guys. It's not always the case, but it does sometimes happen. They get it wrong. You don't have to agree with them. You see, for last night, I didn't agree with them, and that's why I said I was a little bit surprised at a bullish skew on this. I was a little bit surprised at the size of the volatility as well. So there was a couple of things that caught me by surprise, but it doesn't stop me taking the monies. You know, we were sell-side top edge. We were sell-side RGL, as you know, because I showed you the screenshot. Last night, we talked about it. It wasn't this morning after all the data came out and the prices sold off. It was last night at the cash close coming into the restart, electronic restart. And we've caught an absolute ripper. We've caught a ripper. 44.40s, 43.80s, $3,000 per contract, straight line short. $3,000 per contract, straight line short. And all you had to do was just bring up this chart, and you would have had exactly the same trade opportunity as I did. Well, that's the point, isn't it? That's what we teach. It's not about anything other than the fact that you should be able to replicate all of these trade opportunities. Every single one of them. You should be able to replicate by doing the same values, the same levels, the same storylines. It's the volatility curve, VIX-M, VIX-Y. But it doesn't matter whether it was the volatility curve, VIX-M, VIX-Y, does it? Because also, if we looked at, for example, the futures curve between 1 and 2, Was that bearish as well? What do you think? Was the futures curve 1 and 2 also bearish? Massively bearish, right? Massively bearish. The futures curve was right in line with the overall shape of that structure, wasn't it? In fact, it was more so because it started to show up. It started to show up a lot earlier. This was still showing a little bit of balance. The futures curve was obviously getting murdered. Absolutely murdered. And therefore, to me, there was probably no decision to make about this. This was just simply sell side only. You know, this is obviously ticker. This is obviously ticker VX, as you know. In the futures markets, you can build your curve using VX and VX. You can use VX and VX2 to build a curve, and you can use VXX as well as part of that storyline. So you can do VX2 times VXX, and you can do VX1 times VIX, so that you get a little bit more depth to your data. So you're getting some futures and you're getting some index information in amongst that between the curve narratives. So you can actually build a little bit more in depth, so that when you drill down into lower time frames, that curve becomes a little bit more easier to see, that you can see some of those elements inside the curve itself. So it's quite an active curve itself, isn't it? It's quite an active curve. Let's drill it down into a 1 minute chart and let's see how it's behaved since the cash open. And you can see since the cash open, there's been a few attempts to try and reverse out the market shape here. There was an attempt to reverse it out here and it was successful. Went back short, an attempt to reverse it out here in fair value narrative. This looked a little bit cheeky. Price rallied, but the curve came back in on the short sell and the price pressed back in. And again, it's chopping backwards and forwards at the moment. So still not really showing any macro signs of a buy opportunity. Still not really showing that macro sign of a buy opportunity, but certainly very, very definitely in line with the overall state of play. This is obviously a very strong macro storyline, and just has to be acknowledged. It just has to be visible, and it is visible. It's very visible. So again, doing the necessary in the background, doing the necessary work, making sure you've covered all the bases doesn't mean that you have to agree with these guys. I didn't agree with them, and I was right and they were wrong. You don't have to agree with them, and you would have been right and they would have been wrong as well. It is what it is, guys. It is what it is. It's up to you how much work you put into this. The storyline is yours to build, and obviously as you build that storyline, things start to become a little bit more sensible. We've seen a bit of a flatness on the knob spread.